Welcome back to Claims Denied, a hospitalogy podcast talking about the business of healthcare and health system transformation. Today, super excited to be joined by Charlie Martin and Devin Carty over at Martin Ventures. And I've got these two folks in a conference room. Had a little snafu getting the technology set up, but now we're here. Devin and Charlie, thanks so much for hopping on the podcast. I would love for you guys to give a brief introduction. We can kind of go from there.
Well, thanks for hosting us, Blake. We're honored to be here and hope we can provide information that will be useful to let you know a little bit about what we're doing. I'm kind of a lifelong healthcare guy. I've been at it all my adult life, going back into the 60s, and motored through a number of hospital companies. There's some preliminaries that go in front of that, which I'm not going to take time to go into, but in 67, 68, I joined a group of fellows here in Nashville, businessmen, who had backgrounds in real estate. In fact, one of my associates was one of the first franchisees of Holiday Inn. And so Medicare had just passed, and they thought I had some background in healthcare, but they got interested in developing nursing homes primarily as a real estate deal. They were builders and operators of dormitories, apartment complexes, motels, et cetera, et cetera. And so when they wanted to get into the nursing home business, I had a little bit of background there, so I joined them. We started out General Care as a nursing home company. We built and operated several nursing homes here in Middle Tennessee, but shortly after we got underway, we had watched the development of HCA, which I think went public in 1968, and we had seen that grow from one hospital, Parkview Hospital here in Nashville, to a multi-hospital system. They'd gone around the country, Tommy Frist, and primarily rounded up physician-owned hospitals in various parts of the country, Texas, Virginia, elsewhere. And I don't remember the exact number, but had 10 or 12 hospitals assembled, and that became HCA, which grew out of Parkview Hospital here in Nashville, which was a joint venture amongst Dr. Frist Sr. Tommy had just gotten out of medical school in St. Louis. Dr. Frist Sr. and a group of physicians formed Parkview Hospital as a joint venture amongst themselves. They had some operating challenges and difficulties, and that led Tommy to bring the idea. He had been roommates in St. Louis with Kemmons Wilson's son. Kemmons Wilson was one of the founders of Holiday Inn. And so Tommy sort of took the notion, why couldn't you do in hospitals what Kemmons Wilson and his associate had done in the motel business, and create standardization, national brand, et cetera. And out of that grew HCA. That really inspired our guys to say, why don't we sort of do something like that? There were also a number of physicians in Nashville who had not been given an opportunity to invest in Parkview, but they liked the model. And so we built our first hospital in Nashville. We actually converted a nursing home, which the building had not been completed. So we revised the plans, converted it into an acute care hospital, took in 50 doctor partners, each of whom owned 1 or 0.5% or 1% of the hospital, and took off in that direction. Over the next several years, we developed 8 hospitals with that format, physician ownership. They had a minority interest, but a significant minority interest, and were very involved in making decisions with us about how the hospital would operate, et cetera, et cetera. So General Care grew out of a nursing home company, converted to hospital company with physician partners. In 1980, we were a New York Stock Exchange listed company, a small company, but we were acquired by HCA in 1980. And so we merged with them. I became an officer of HCA, and we basically put General Care inside HCA and grew. For 7 years, I was at HCA as the growth officer, doing acquisitions and development, building new hospitals. In fact, in last year, before HCA slowed down when the stock market kind of collapsed on them, I did 50 acquisition deals in 1 year. We were doing a deal a week. So we were an acquisition machine. I was there when we broke through the 100 hospital level. I remember breaking through $1 billion in revenue, which was a big deal. And so I helped with the growth of HCA. Ultimately, the last couple of years was on the board of directors of HCA. So I was a senior officer and a member of the board. And then HCA made a decision to spin off its underperforming hospitals, 104 hospitals that were underperformers, bringing kind of the overall corporate result down. And so a decision was made to spin those off into a separate company using ESOP financing, which, as you know, involves every employee has a piece of the ownership. So HealthTrust was funded that way. We had high yield bonds that were underwritten by Drexel Burnham back in the day when they were flying high in the junk bond business. Michael Milken had virtually invented that sector. So we were a customer of theirs in 1987. I was at HCA from 1980 to 87 when HealthTrust spun off. I left with HealthTrust as the chief operating officer and a director and was there for 4 years. Then I left HealthTrust, basically started my own company, which we called OrNda. It was out of the old bankrupt Republic Health Corporation, which itself had been a spinoff of HCA. They had not performed financially, had gone bankrupt. And so
I'm noticing a pattern here with the HCAs.
So I always get called on when times are troubled. So somebody once described me as I'm a wartime general.
The Bill Parcells of healthcare, right?
We took HealthTrust, basically had $1.6 billion in revenue, 104 hospitals. So here we are with an average revenue per hospital of $15 million. So we had the smaller underperforming hospitals for the most part. In 1 year, we moved our operating margin from 14% to 21%. We improved it 50% in the first year. I had responsibility to the operation of those hospitals. I had not had any operating responsibility at HCA. I had been the acquisition and growth guy. So that led to, obviously, a nice result for HealthTrust. I had been fully vested in the equity that I was given as one of the incentives to go over there. So having gotten fully invested in that equity, I decided to sort of split out on my own. And as I said, formed a company called OrNda out of bankrupt Republic Health. And we grew that over a short period of time into the third largest of the hospital management companies. Small by today's standards, but we were a player in the industry at that time through a lot of acquisitions. We had a handful of hospitals to begin with and then made a number of acquisitions. We sold that company to Tenet. And so after OrNda, and I think I had OrNda for 4 or 5 years, I forgot, in a fairly short period of time, we then formed what became Vanguard and started afresh with no hospitals. We went out and our goal was to find underperforming not-for-profit hospitals. I'd had my experience taking floundering for-profit hospitals and getting them on the path to fiscal health. So we targeted the not-for-profit sector, and we really wanted to go after underperforming multi-hospital systems. We had some success there. One of the acquisitions we made was the 5-hospital Baptist health system down in San Antonio, and made some other acquisitions. We also bought some singles along the way. We got into Phoenix with a single acquisition, then grew that into, how many hospitals do we have in Phoenix? 4 or 5? Six hospitals at the end. And again, we were buying not-for-profit hospitals, not for-profit hospitals with converted ownership, but not-for-profits. And the characteristic I think that we could use to describe those, they were underfinanced, underfunded, underperforming, struggling hospitals. Nobody with a successful hospital ever called us and said, let us give you our terrific hospital that's doing great. We want to take it to another level. They called us when they were on the way to the graveyard. And so that's sort of where we made our play, is floundering and failing or marginal not-for-profit hospitals in terms of their financial performance.
Including Detroit Medical Center, which you may want to talk about.
I'll talk about that in a minute. So at any rate, we grew Vanguard. How many years did we have Vanguard? I've forgotten, but in 2013, we sold Vanguard as we had sold OrNda. We sold Vanguard to Tenet Health. And that's when I got out of the acute care hospital business. And a few years prior to that, I had started Martin Ventures under what was then Martin Companies, and we had made some investments outside the hospital business, but then formed Martin Ventures as it now exists in 2013, and have subsequently grown it. So I exited the acute hospital business in 2013, having been at it since '68. And we'd get into this a little bit. Devin can talk about it a bit, but we saw a lot of opportunities in healthcare, particularly around some of the technology plays that were beginning to have an impact in healthcare. So this combination of healthcare, health-related, health-adjacent services powered by technology is where we focused. Over the years, we've had several portfolio companies. Devin can talk a bit about our performance later. Devin, in fact, and I sort of split ways after we sold Vanguard to Tenet, and he can tell you about that experience. He had a couple of years in another business and then came back and rejoined me and subsequently became CEO of Martin Ventures. So that's kind of how we got here. One of the questions you had asked about challenges we had, Detroit Medical Center in Detroit was a $2 billion hospital system, grossly underperforming, grossly underfinanced. And they had come to Nashville to meet with HCA to see if HCA would buy their hospitals and, quote, bail them out. They went to HCA. They kind of were met with a frosty reception at the desk. And Tommy basically said that there was no point in meeting with them. If they'd get their profit levels to 10% margins, then they could come and talk to HCA. So they kind of wandered over here because they'd come to town and gotten turned down by HCA. So we took a meeting with them, and we saw a pony under that pile. And so we ended up acquiring Detroit Medical Center, $2 billion in revenue. We had to do some financing to make that acquisition. And as we were going around talking to potential lenders, they said, does this make any sense? I mean, this is a failing hospital. It's losing money. It's, doesn't have a market leadership position. There were 2 or 3 other systems in there that were the market leaders, and it was certainly the market laggard. And they said, this is a big risk. And I said, yeah, we're a $4 billion company making a $2 billion acquisition of losing hospitals, and we're kind of betting the company. And I'll be back in a couple of years and either tell you this was a brilliant acquisition or I'd taken the company under. It was going to be one or the other. It was not going to be an average deal. And it turned out being an outstanding deal. We could go through hours of describing what we found there and what the opportunities were there. But we bought the hospital for almost no money. What we did is made a commitment to spend a lot of capital. They were way behind on maintenance of their property and equipment and their buildings. And so we made a major commitment for capital investment. And that was really the purchase price, the commitment to the capital. That's what they wanted, is to get an upgrade of their facilities. And along the way, we got a lot of operational improvement as well. So anyway, that's sort of how we got here. And we basically got all of our money back from our acquisition price of Detroit Medical Center in less than a year, in sort of net zero. Now, we did have this several $100 million obligation to capital spend, and we met that capital commitment, including building some new hospitals, significant renovation and upgrade of existing hospitals. So anyway, that's kind of how I got here.
Yeah, that's great. I appreciate that little bit of healthcare history. I love hearing stories about that and would love to dive in more. But first, Devin, would love to hear how you kind of, fit in here. Where did you get involved with Charlie and kind of your story too?
Yeah. So I started my career on the science side and then went into management consulting. And I like to say that I was blessed to join the Vanguard team. I grew up there. I mean, it was just an amazing opportunity. So I joined Vanguard as their chief talent officer and then went into head of patient experience and ultimately the chief marketing officer. And I just remember those days, like I was every Monday morning, Charlie would have this meeting. It was all the corporate officers, and then subsequent to that, we'd have the market presidents on. I just remember sitting in that room, looking around, and it's Charlie Martin, it's Phil Rowe, it's Keith it's like legends in the healthcare industry, and I just like soaked it in. I just worked every hour I possibly could, traveled every day, did anything to just prove that I deserved to be around that table. And candidly, I didn't deserve to be around that table, but Charlie was kind enough to let me there. And
as it turns out, we didn't deserve to get Devin.
Yeah, right. It was just an amazing opportunity. So I rode the ride with these guys, with Charlie at the helm. And then I also say, Vanguard was a complete blessing in my life from a learning experience, and obviously getting to be so close with Charlie. Financially, it was a big deal for me as well, because I didn't know what equity was until I joined Vanguard and learned that. But I remember when Charlie called and said, "Hey, we're selling Vanguard," I think I was probably the only executive that was upset, because I was like, I loved that place. It was where I grew up, and really, became a leader in my own right, and just had an absolute blast with all the people there. It was a very driven culture. Like, everybody showed up every single day. You had to be your best, because all those executives were really at the top of their game. That's what Charlie had, just this really unique ability to do, is bring in the best at legal and finance and development, and everyone had to be the best every single day, or you weren't going to make it, because it wasn't a kumbaya session. It was we're here to grow the company. We're here to perform. Once Vanguard sold, I went on to, my best friend died of stage 4 colorectal cancer right during that exit. And so I wanted to do something in the oncology space. And so I went to go be the chief strategy officer for Cancer Treatment Centers of America. Did that for 2 years. And Charlie was kind enough to have me, we talked all the time about, the work he was doing at Martin Ventures. And I came right back up here when that was done. So that was 2015. So I've been back here for an additional 10 years. It's just been this is not a job. This is a lot more fun than running hospitals, I'll tell you that.
You're not at war anymore, right?
Yes, exactly.
Yeah, and that's great. And I think that's a great, segue into what you guys are doing at Martin Ventures. I'd love to hear obviously between the two of you, you've got decades and decades of real healthcare experience. You've seen more paradigm shifts than I have in my, 8 years have been in the industry. And I'm curious, from all of those organizations and all of those roles on the for-profit side, the nonprofit side, doing deals, growing Vanguard from scratch and selling it, all of these things, what kind of closely held beliefs about healthcare have not changed through all that? And how have you applied that to Martin Ventures today?
Well, let me just take a lead, and then I'd like Devin to fill in the rest. I think, first of all, what hasn't changed about healthcare is it's a people business. We're dealing with, we call them patients, but we're dealing with people generally in their most vulnerable moments. They come to us, either accident or an illness. They put their lives into our hands along with the physicians. And so I think there's a great responsibility, morally, ethically, and otherwise, to view these people that come under our care as human beings, individuals, treat them with dignity, treat them with respect, be fair to them, try to keep our costs under control so that we offer value. And value to me is, what does it cost and what do you get? And in every case, we have documentation of tremendous improvement in quality of care in all of the places we took over. That includes the HCA hospitals we converted, the not-for-profits. All the measurements of quality were improved. Safety was improved in our hospitals. So we had a number of initiatives that we undertook. But so the patient, the person, is at the middle of this. Secondly, is I believe that the employees, everybody says this, but they don't then walk the talk, and that is, employees are our most important asset. This is what we're all about. But we truly believe that and try to behave that way. We have the patient on the one hand, we have our own employees on the other hand, then we have the physicians, most of whom in all these circumstances didn't work for us. They were independent contractors who used our hospitals. And so we thought great relationships with physicians, responding to their needs and desires. great care to patients with quality, good outcomes at a reasonable price and fair treatment of our employees were kind of the bedrock of our business.
Completely. And I think the neat thing about Martin Ventures is that because of all of that historical knowledge, it's helped shape our strategy, where we're going, the companies we start, the companies we invest in. Because to Charlie's point, that people are the most important thing. Like, one, we're caring for these patients in almost every one of our companies, or two, we're partnering with providers to provide that care. Because that too is one thing that's never changed in healthcare, is you always have to have a provider. Like, that's how care is delivered. That's the only way that something can go into an EMR and provide the care for that individual patient. And so as we think about Martin Ventures, we've kind of leveraged our past experience of like what works well in a hospital, what doesn't work well, the relationships that we've had with payers and providers. And, you look back at Vanguard, that was 46,000 employees. Those employees are all out doing something now. Some are running, one of them's running Providence, they're all over the place. And we leverage those relationships to help support our companies as well. Because, I will say that even though Vanguard was extremely driven culture, every executive I've ever talked to will come back and say, we didn't know how good we had it there. It was just an amazing culture, an amazing place to be. And when you looked around, it was talent all around you. And that was just such a unique, you don't see that everywhere. And it was such a unique thing that Charlie built. And it would only work with him at the helm. That's something I really believe.
Yeah, and that's interesting. I feel like, Charlie, I would love for you to break down, like, how do you instill a culture like that into an organization from the top down? Like, how do you identify talent? And, I assume a lot of that might carry over to, in making investment decisions today, or trying to find, the right leader for the right company. How is that all translated?
I had the good fortune for 7 years to be at HCA, and I got to spend a lot of time with Dr. Frist Sr., who's still fairly active. He was still actually practicing medicine, seeing patients, but he also had corporate responsibility at HCA. He loved doing acquisitions and development. He loved meeting doctors. And so, in being the acquisition guy, I got to spend a lot of time with him, travel with him. He loved to go out when we'd look at a hospital or meet with the medical staff in a hospital to explain, why you should want to come and join HCA. And I just learned a tremendous amount from him. But one of the things he said, which almost sounds like a cliche, but it's not, is that good people beget good people. If you have good folks, they tend to attract other good people. And if you sort of got a little rot at the core, starting at the top, that seems to spread through the organization as well. So I think, leading by example, saying, I'm not going to ask you to do anything that I'm not willing to do. If I can't help you do your job better, then I've failed. And I've just had the good fortune. Fortunately, there are people, Devin's one, but some of the people that work here, Phil Rowe and I, have worked together for, how many years?
Like 35.
35 or 40 years we've been together.
Over 40 with Joe.
Yeah, Joe Moore and I go all the way back to the HCA days in the 80s. And he's still affiliated with us. He's not an employee, but he's an advisor and co-invests with us, et cetera. So I've just had that good fortune of having really competent people around. And I find that people kind of self-select. If people are underperforming or can't perform, I've rarely had to terminate somebody. I think a lot of people don't feel comfortable in an environment where everybody else is working hard and getting results and you're not. And so we've, had some people who drift away. I'm not saying they're bad people. They just didn't, buy into the culture and what we were doing. So culture, I think, is everything. And how we treat people, respecting them, valuing them. And then compensation fits into it as well. I think that I was a big believer, always have been, that everybody who participates in the success ought to be able to enjoy some of that economically. So we've always had a strong incentive compensation in all the companies I've been involved with, not just of cash bonuses, but of equity, so people can own a piece of the company. And I think most people that I've worked with over the years really behave like owners, not like employees, because in effect they're working for themselves. And we work together as a group, but everybody understands how their contribution contributes to the overall result. So I don't know, it's just a people business, from the customers to the employees and associates who provide the service.
And Blake, it really does link back up not only from the hospital days, but even to what we do here at Martin Ventures. When we're starting a company or investing in a company, that number one critical piece is the talent. Like, we look at number one, is this CEO somebody that we're going to bet on, or is this entrepreneur somebody we want to partner with to launch the company? And in every case we've had an issue, like literally every case, over 50 plus companies that we've invested in from a Martin Venture perspective over the years, it's always come down to that CEO of that's where the issue ultimately is, or that individual is what's going to make this company be incredibly successful because they're willing to go through walls. They have the talent, they have the ability to win the hearts and minds of the team, and to really sell the strategy and the vision of what they're ultimately doing. And I'd also say, just to Charlie's point, some of the unique side of Martin Ventures is, we don't have LPs. I mean, a majority of the capital that we're deploying is Charlie, but as he mentioned, Phil, Joe, myself, others, we deploy our own personal money into this. So it's not like this is an LP of an endowment that we're managing. It's like it's coming out of your checkbook. So you really are focused on making sure these companies are successful. Number two is that everybody here has been with Charlie through the years. Like, we've got to experience Charlie at the hospital system, now here, and it's a family. I mean, we've been together for so long that we support each other, and really do believe in that the Martin family is number one here. And so we always think about Shan and Charlie and their kids, and how we want to make sure that there's this lives on far beyond all of us. And I'd say the last piece is, because Charlie's so entrepreneurial, that's embedded in us. Like, we now, we focus more on building companies than we do just outside investments, because I think that's at our core, number one. But number two, that's where we've seen the largest success from an ROI or an MOIC standpoint. So that's really where we find the passion as well. That's the other piece here, is like, this is not, we don't build widgets. We build companies that do make a positive impact to the healthcare ecosystem, or do impact patients in a positive way. And so, there is such purpose that is driven through this place of not only what we were able to do with the hospital systems under Charlie's leadership, but now what we're able to do here with much more capital light businesses, and much more focused on technology, AI, value-based care, but all really making a positive impact on patients, the healthcare ecosystem as an overall, or we're very pro-provider. And the last thing that I'd say is, specifically in the companies that we're starting ourselves, we ensure that there's a healthy management option pool, because just as we benefited from being part of Charlie's companies and being able to have equity in it, we want everyone to do the exact same. So when we exit a company, or when we recapitalize a company, we want the employees of that to share in the value creation that they ultimately created, as they built that company up as well.
I feel like Casey Stengel, when he was managing the Yankees, and they were giving him great credit, said, "Casey, you've done a wonderful job managing this team. You've won your X number of World Series." He said, "I couldn't have done it without my players."
Well, Charlie, to that point, what you were saying around, good people beget good people, and the folks you have around you have self-selected your entire life to be that way. So I think, there's some credit where credit is due there, right? But yeah, that's interesting. As far as what you just said, Devin, around, kind of having the entrepreneurial lens and all the employees sharing in the equity, that's a commonality across all Martin Venture built companies? Is that from top to bottom, there's equity component?
As you think about every one of the companies, and it's a little different just when we've done an outside investment, but I can say across every company, there's a healthy management option pool. And, obviously CEO down, each company decides how far down they want to provide the equity. In some cases, it's every employee. In some cases, it goes down to, VP, director, something along those lines. Because we have found in certain circumstances, people don't value the equity of what you're giving them. And so, we've kind of learned our way, of where we find the most value in being able to provide that equity. But in every case, there's a healthy management option pool put in place so that when we are rewarded for whatever outcome we have, that management team is also rewarded.
Yeah, it's fascinating. I love that. That's very cool. Okay, so I'd like to back up just a little bit because I'm just curious for maybe y'all's kind of first principles thinking. And, I'm talking to guys who have a ton of experience in healthcare, and you've lived through kind of the HMO type thing of the 90s, and then you lived through kind of the ACA. And I feel like each one of those was kind of a paradigm shift, right, in the way that healthcare, not fundamentally, but, the mechanisms at play. So I'm curious, as you look at, the more recent time frame, introduction of AI, is this a new paradigm shift in, how healthcare fundamentally works? Or is it just like, AI is a feature set of, future companies? And how do you think about, what you're investing in, what you're building in for Martin Ventures from y'all's perspective specifically?
Yeah, I'd say really twofold that we're put a majority of our bets with our existing companies and I think where we'll be in the future. One is around value-based care. And I think that, when we say that generically, I think we've been talking about value-based care for well over 20 years. And it's simply, even back in the Vanguard days, we had one of the pioneer ACOs, which I think was like 2011 or something. So when we've been talking about, value-based care for a long time, I think that what we've seen in the last 4 to 5 years is it's actually here. It's really focused on a select, segment or payer mix, like, really focused on MA at the beginning, really focused on Medicare with the MSSP ACO program. I think we're now starting to see it, and we have one of our companies is testing out within the commercial side. And then I think over time you get into Medicaid. But I think we're headed down that path now. And in all of those, it's realigning incentives, because we all know that the system it works exactly as designed. It is built as a fee-for-service system. And so we have to re-engineer those incentives to incentivize providers and organizations to provide high quality care at a lower cost, while driving a great patient experience. And so that's a big factor when we think about our portfolio. And so you've got, Wellvana and Advanced Primary Care. You've got Harbor with rebuilding an insurance company. We've gone after a lot of the specialties like Reimagine Care and Oncology, Levar and MSK, Synaptic and Neurodegenerative, Evergreen in nephrology. And so we've kind of headed off. We believe that those are going to continue to be a big part of the change that happens in the healthcare ecosystem. I think that employers are going to be a big piece of what goes forward. We haven't really figured out exactly how we want to attack that yet, outside of our company Employer, which is helping employers find the right benefit plans. And then the second piece, which you just articulated, is AI. And I think of AI as like the revolution that you saw with computers and then mobile devices. Like AI to me is that exact same thing, maybe even larger to some degrees. I think what we're seeing happen in AI is some companies just say we're an AI company. I don't know exactly what that means. I think more focused where we're looking is like we have a great service, we have a great product, and we're leveraging AI to make it much more efficient or effective, or AI to replace a lot of the mundane tasks or jobs that really just didn't need to exist. Like, think about a lot of the non-sexy stuff in healthcare, like coding and credentialing, and that's where AI can absolutely make things much more efficient. And I think that we're going to see a big change from a hospital standpoint. I happen to sit on the board with one of the hospitals where we're really focused on leveraging technology and AI to decrease our labor spend as a percent of total revenue. And I think that that's going to be a metric that a lot more hospital systems are going to be talking about. And so as we think about the companies we invest in, we think about the companies that we build, a lot of them are touching, again, value-based care, AI to some degree, again, more in the non-sexy spaces. We definitely believe in AI to impact quality care. I think that that's what we're starting to see with a lot of the FDA-approved companies and the pharma companies. That's just not a space that we ultimately play in.
Yeah, that makes sense. And back to, your thesis around value-based care, what would you say to, I'm sure you've seen a ton out there, like talk to health systems who are so focused on like kind of the recent rise in utilization and how lots of programs have failed and haven't generated savings and those sorts of things. What would kind of be your response to, those, I guess, naysayers, for lack of a better word, like value-based care is not a real thing, it's just like a rounding error on a health system's balance sheet, whatever. I'm just curious for y'all's opinion on that.
Well, you go back and just sort of set a framework for that. There's always been, at least the 60 years I've been doing this, a tension, sometimes a healthy tension, sometimes an unhealthy tension between payers and providers. The old thing was the provider wants to get as much out of the payer as they can. The payer wants to pay as little as they can to get the service that's acceptable to their customers. So you've had that friction between payers and providers. There have been efforts to combine those. We did that at HCA for a while. We formed an insurance company. We merged and created an insurance entity saying, gosh, we can do insurance and provider. You got the whole package. Nobody really has done that very successfully. Kaiser's done it. Obviously, there are a handful of places that have done it, but those are the exceptions. The tension that you have going on as a provider, for example, now this is an oversimplification. You think about it, if somebody is a fee-for-service payer, you want to admit as many people as you can, keep them as long as you can, and do as many things to them as you can. More procedures, more tests, more this, more that. A lot of what drives healthcare costs to 20% of the GDP and still out of control is this lack of paired incentives. So again, fee for service, admit all you can, keep them as long as you can, do as many things you can to them. On the other hand, you've got people that are cost constrained. And so what you want to do is provide limited service at a very low cost. Then if you've got the middle of that, the managed care, we want as many members as we can get, but we want to provide as few services as we can provide and still, meet the basic needs. So when you have the payer mix of some fee-for-service, some contracts that are, capitated contract, that sort of thing, and then you get all the way to true integrated and managed care, value-based care. Again, as Devin says, it's been more a term that people have used than a real way that drives how systems operate, either payers or providers. And I think that's this sort of neverland we're in now. Where's all that going to fall out? I thought a lot of things that are happening now were going to be happening 20 years ago, and they should have happened 20 years ago. But and I thought eventually costs would come under control. I thought, we used to look at these projections about, his spending was 12 or 14% of GDP. It's moved up. If you told me that it could get to 20% of GDP, I said, there's no way that's possible because what we spend, for healthcare, and particularly when you compare it to the results we get, whether it's, the length of life or quality of life or whatever it may be, we come up short in so many areas. So we've got this wonderful system with great resources, great assets, but it's just a clunky, inefficient. It's not even a machine. It's just a jerry-rigged bunch of stuff that doesn't really integrate with each other. And then you got different parts of it pulling in different directions. So, it has to be a little bit schizophrenic.
Yeah. And Blake, I'd also say for like those that would criticize value-based care of not being a big piece of it, I'd say it's becoming larger and larger piece of the pie. But I'd also say it really just depends on your vantage point. So if you're a hospital and you're running at 400% of Medicare and you're running at 102 capacity, you don't want to talk value-based care ever. Like that's something you're punting for years to come. You're just like living on the fee-for-service monster, to Charlie's point, seeing as many patients as you can, keeping as long as you can, doing as much as you can do. Now, if you shift the mindset and you say, okay, I'm a hospital system and I am the low-cost, high-quality provider in the market, and I'm running at 125, 140, at 200% Medicare, value-based care is the best thing that's ever happened. And I'm doing as much as I can to now shift contracts into value-based care, not only doing, MSSP ACOs, and not only doing MA, but now starting to shift your commercial agreements into something that has rewards or incentives to caring for these patients in a better way, and that is what the payers then have the ability to shift onto the employers. But like, it just, to me, it depends on where you're sitting, because if I were running a hospital that was had a 400% Medicare, I wouldn't be talking about value-based care either. It's only those that are the low-cost, high-quality providers, and then it's a strategic advantage to you.
Blake, something I could say over all these decades in this business, other than the 7 years I spent at HCA, and I kind of carved that out because I was not a part of the operations. I was doing my unique piece of that. But all the other places I've been, all the companies I've mentioned, General Care, OrNda, Vanguard, HealthTrust, each and every one of those, what you hear generally from the hospitals is we are very profitable in fee-for-service. We break even or lose a little money in Medicare, and then we get crushed in Medicaid. In every system I've ever run, we were profitable in Medicaid. We made money in the Medicaid business. So we thought Medicare was a pretty good payer. And in a lot of our hospitals, just because of the nature of what they were and where they were, we had virtually no fee-for-service. Detroit Medical Center didn't have a lot of fee-for-service. We had a ton of Medicare and a ton of Medicaid and a ton of no pay. But we were always able to be profitable over whatever the payer category was in our hospitals.
But that's so interesting to me because, I feel like that's a common point within the industry. Like, there's like, the subsidy of the employer.
It's absolutely true. They make money on fee-for-service. They complain about breaking even or losing more money on Medicare and getting creamed on Medicaid. If you can't put together a cost structure with quality service, good results, great outcomes, and do it somewhere at or slightly above Medicaid rates, you're not really performing, in my opinion, at an optimal level.
But so that's interesting because it kind of, brings us back to the conversation about you being this like wartime general, kind of come in and turn around. So what did you do differently to make that happen, and why isn't that happening, more broadly across the industry?
Because it doesn't have to. If you have a great hospital in a great location with a great payer mix, you don't have to do any of that. So if you have a portfolio, and I'm not criticizing, but like an HCA, they got this pristine portfolio. They have market dominance in places like that. I go down the list of all the places that have dominance. So they're the leading system. They're the market share leader. They have magnificent facilities. They've got the great payer mix. And so they've been able to sustain that. I never got the luxury of having those kinds of hospitals. I always got the ones that had to do it a different way.
Yeah. So Charlie, to your point and to y'all's point around kind of, the value-based care thesis and those sorts of things, you got the HCAs of the world and so forth who are, they're in attractive markets, growing demographics and those sorts of things. And they can kind of cherry pick, right? But even the HCAs are still going to have to grapple with policy forces and, top-down level financing constraints.
Someday they will. I thought it would have happened 20 years ago.
Yeah, and that's interesting to me because there is some payer mix deterioration over time, right? As more people shift into Medicare.
Yeah.
And then you've also got like these forced programs, value-based care programs, right? Like the team model and like the bundled payments and those sorts of things. But also the prevalence of chronic disease and the need for kind of more longitudinal patient relationships where it's not just the, acute events and then you're off on your merry way. It's like hey, you've got diabetes or obesity or whatever it is.
And that's a lot of what our emphasis is now in some of these specialty areas, particularly around the chronic care, whether it's cancer or kidney or whatever it may be. Yeah.
So that's fascinating. And Devin, back to your comment about talking about the high quality, low cost provider in the markets. You're on the board of Mercy, correct?
Correct.
And you guys, correct me if I'm wrong, you guys just did a partnership with OrNda, one of your portfolio companies, a 20-year arrangement around kind of value-based care. So I'd love for you to kind of, maybe contextualizing within Martin Ventures and your investment, those sorts of things. Maybe you could break down what that partnership looks like and the economics and kind of how that came to be.
Yeah. So first of all, for those who don't know Wellvana is one of the the second largest actually physician enablement companies. So I think the big difference between Wellvana and some of the others out there is that Wellvana is very diverse when you look at the client mix. A majority of them are actually hospital systems. And so to Charlie's earlier point on most hospital systems make 90+% of their profitability from commercial, they break even on Medicare, they lose a lot on Medicaid. What we're helping these hospital systems do today is really focus on that Medicare and Medicare Advantage population, on better caring for those patients, and then creating additional profitability for these hospital systems, because today they're almost all break even or contribution margin negative on that. And so that's Wellvana in a nutshell. For those who don't know Mercy's a $10 billion hospital system based in St. Louis with hospitals in Arkansas, Oklahoma, and Missouri. And that system is exactly what I articulated around a system that is very focused on value-based care, because they are not, the BJC academic medical center getting 500% of Medicare. They are the low-cost, high-quality provider in every market they are in. And so that partnership between Wellvana and Mercy is it's literally perfect, because when we go out and we partner with physicians that are not employed by Mercy, but they're in those states, we want to partner with the hospital system that is the low cost, high quality provider. So we want to leverage Mercy as our narrow network that we're partnered with and sending patients to. On the opposite side, as you think about Mercy, Mercy is a majority employed physicians. I think they're like the fourth largest employer of physicians in the US. And it's massive. And they do such a good job of being able to pick the right physicians, get them on the Mercy Care model, leverage great technology, care for patients, incentivize them properly. And so this opens up a whole growth route for Mercy to pick up patients that normally wouldn't have gone there, because these independent physicians weren't sending them to Mercy. They were sending them to one of the other hospital systems within one of the Mercy markets. And so we really do see this as a win-win for both Wellvana and Mercy. And candidly, this is something that we're betting on with all of the partnerships that we have under Wellvana with all the hospital systems. Is we want to be the partner for the independents around them, so that we can find more independent partners, independent practices, help these independent practices continue to create profitability from patients they're probably break even on, and then having them come into our ACOs, and then leverage the hospital system partners as our narrow network or our preferred provider for acute care services, because the majority of them are those low cost, high quality providers and believe in value-based care.
Yeah, that's fantastic. Very, very interesting. We'll be curious to see how that evolves over time. I'm curious. So you made a couple of remarks around providing technology and those sorts of things. So within Wellvana or your other value-based care centric investments or built companies, what have been kind of the most impactful components of the technology stack within that have enabled providers or enabled those organizations to succeed?
Yeah, I mean, there's a couple different things that have come out to really show a big impact. One is being able to leverage technology and AI to identify the patients that are most at risk and where we need to spend a majority of our time. Because if you think about all, the 1 million+ patients that Wellvana serves, you can't service everybody the exact same. So you have to segment out the patients and say, we've got this one obese, diabetic, hasn't been into their PCP in 3 years. Like, these are patients that we now need to figure out how to engage with and get them into a healthier state. And because we're, one, we want them to be healthier, but two, we're at risk for the dollars. So we definitely want to engage them and get them in. So one's been all around being able to identify the patients, risk stratify the patients, and then engage the patients is the other piece. That a lot of what we've seen just really over even the last, I'd say 2 years, is the evolvement from call centers being able to reach out to these patients, try to engage them. That's all AI driven now. I mean, it is literally just a bot that reaches out to the patients, engaging them, reminding them of appointments, minimizing no shows. I mean, it really has that all has just almost completely been replaced by AI. And so we've seen that occur. We've also seen a lot occur within the AI scribe space. As far as we've seen, it's not really gone down to the patient side outside of the coding side, but what it has done is it saved hours for these clinicians, and it also is saving a lot of money by accurately coding. And so all of these physicians that are having conversations with patients, rather than sitting on their computer typing it up, it's automated scribing, dictating the notes for them, and then coding on their behalf. They obviously have to approve that, but that's saving hours for these clinicians each day, where they would have taken their notes, and then they at the end of the day they're trying to remember what they said, what they did after another 20 appointments. And it really is creating a more efficiency, accurate. I think it improves the patient experience because you're actually able to have a dialogue with the patient. And so we've seen a lot happen within the scribe space as well.
Blake, I think depending on your specialty, some physicians should be very, very afraid of AI.
Oh, geez.
Certainly
you think they're coming for them?
Well, around some of the diagnostics, I mean, they're proving that their accuracy of diagnosis can be at or above the level of the best physicians.
I think that brings in a lot of interesting, obviously the job security thing, but too, I think about things like malpractice insurance, right? Like if there's fewer incidents, potentially that might lower costs, right? Significantly, and liability for a healthcare delivery organization.
And improve quality. I mean, if you improve the ability to diagnose, I mean, that's where treatment starts for everything. What are we treating?
Are you guys worried at all? I was just reading a recent Wall Street Journal article, and there was a Lancet study cited that said these gastroenterologist doctors who used and leveraged an AI tool to identify, polyps or whatever it was. Once that tool was removed, they were actually statistically significantly worse at their jobs in identifying polyps, though there's this kind of de-skilling effect. Is this anything you guys have, researched or discussed or thought of, kind of AI's effect on critical thinking, for lack of a better word?
We haven't really dug into any of that, but I mean, I think anytime you do your job for so long doing the exact same task and become great at that craft, and then there's a technology that comes alongside you and makes it way easier. I think there's just the reality of the situation. I mean, I think that you're going to now depend on that technology to do because it just made it so much easier for you to practice.
Yeah, but to your point, Charlie, if that AI is better, or maybe it's in tandem, they're better, right? I don't know.
I mean, look at robotic surgery. How long are you going to need a guy, doing the controls on the other end of that?
Yeah, or can you just train some tech out of some sort of trade school and have them train on the robot and the AI, and that's
if you look at what some of these Chinese robots are doing these days, it's pretty amazing stuff. It's very human stuff they're doing. AI is going to replace us all. Fortunately, I'm old enough; I can't be replaced by corpse.
Yeah, you've done your time. Whereas folks like me and Devin, we got the guillotine coming for us.
Every
especially
age,
me,
Every age has its challenges. For me, the challenge was the invention of electricity.
Oh, is that right? Did that really shift things for you?
Rock my world. Until I was 11 years old, our house didn't have inside plumbing. So I know the earlier world, the Stone Age world.
Man, you've really been through it all.
I've been through it all several
times.
For you. It's been through me as well.
Yeah. So I'd love to ask one more healthcare question and then one kind of just fun question to wrap up. And maybe we've touched on this a little bit already, but as we're looking to, it's a new year, as we're recording this, 2026, what's next for Martin Ventures as far as, what you're looking to build or what companies you're looking to invest in? What's kind of the key themes that are emerging for you guys?
Devin is a trained futurist, so I look to him. I can tell you all about the past. He can tell you about the future. That's why we get along so well. I know all about the 40s. He knows about the 2500s.
I think it's a lot of what we talked about today. I mean, we definitely believe AI and technology are going to minimize labor and waste. And we see just the ability to continue to invest in that. We see that care will continue to move into lower cost setting, whether that's ambulatory, whether that's home, and you're going to see different services that are provided for patients because of that lower cost care setting. And I think that we'll continue to see the shift around incentives for clinicians or organizations that are providing care linked to high quality, low cost care with that ideal patient experience, whatever setting that patient ultimately wants. There are some patients who want that in the ambulatory, some patients want it at home, some patients want it in a clinic, but like being able to select that. Those are just core tenets of where we have invested and will continue to invest. I think the things that Charlie and I get most excited about are just what's that next company that we're going to start. And that's something that I think is really at the core of our firm. But it's because Charlie has led with that through his career. Again, the only person I know that has started this many hospital systems and in healthcare companies. And I think that's just going to be something that will continue to carry forward. And I think that's really where we're focused. We've got a lot of companies. We've got over 30 right now. So I think those companies where we have small investments, not on the board, not as active, we'll continue to support those companies. But really where we want to be are ones where we're at the ground floor designing the company. This is what I tell Charlie all the time is, I wake up every day just so blessed to do this job. Like this is not a job. Like we get to wake up, we get to come up with an idea, we get to turn that idea into a company. That company then employs people. Those employees depend on that company for their family, to feed their family, to go to school, send their kids to school, and in almost every case, those companies are positively impacting patient experience, decreasing the overall cost of care, or positively impacting the provider experience, which is really where we have the most fun. But it's also just incredibly purpose driven. And so everything that we do, every time we start a new company, invest company, it really is just more of that purpose side as well. Don't get me wrong, we are absolute capitalists, but there's also a purpose into everything that we do.
Yeah, that's awesome. I appreciate that. That's fascinating. And I'll be on the lookout for that next company. Looking forward to that.
Good.
All right. One final fun question for you guys. This is how I like to wrap up my podcast these days. As early on in my podcasting career, now that I'm fully into the creator side of things, what is a profound piece of kind of non-healthcare related media or content or a book or whatever that left a lasting impression that really changed how you guys view things?
Well, on the people side, read the poet David White, Whyte.
David White, got it.
White.
Devin, how about yourself?
I'd say one of the most impactful books that I've read recently was Walter Isaacson's book on Elon Musk. I think I've always had respect for Elon, and he I have great admiration for anybody that can start multiple companies that truly change the world in many regards. But his ability to go from high level down to details is exactly what Charlie has taught me in my career, and really what I've seen Charlie do through his career with Vanguard and others is you can live up here and you can set a good strategy and set the vision, but the details are what matter. And you have to get into the details to really understand the operation. And when I read that book now twice, that's what really blew me away by him, is that he has the ability to do that at Tesla and then do that at SpaceX and then do it with, Optimus robots. It's just
the Boring Company. He's drilling a tunnel here in Nashville from downtown to the airport.
It's just
is he doing Nashville?
Yeah, it's actually underway. He's boring 15 miles from the downtown to the airport, and then with multiple stops along the way. It's costing the taxpayers nothing. The city can say nothing about it because he's using state right of way under the state roads, so the city has no authority, and he's not asking for any subsidies.
Fascinating.
He's going to move people around town quickly, efficiently, and safely, and make money doing it.
Yeah, definitely one of the greatest entrepreneurs of our age, for sure. Yeah, I do need to read that book. So thank you both for your recommendations. I'll always like to say I have constantly things adding to my Goodreads. And my wife sees me buy another book.
David White is more philosophical. He's more why than what.
Hey, that sounds like a good balance. So I'm looking forward to diving in. I'll let you know when I do. But Charlie, Devin, thanks so much for taking the time today to talk with me and talk to the Hospitalogy listeners. This has been really insightful. I hope folks who listened learned a lot. And best of luck to you guys in 2026. I'll be looking forward to following along and hopeful for future conversations.
Absolutely. Thank you. We've been very, very honored to be able to do this. Thank you.
Yes, thank you so much, Blake.